Hello and welcome to all our viewers from around the world. This is Business Incorporated, coming to you live from Channel's television headquarters in Lagos. I am Bolaji Akinwale. Today on the program, the International Monetary Fund estimates the Middle East oil-dependent economies have missed out on $390 billion in oil revenues for 2015. And the Central Bank of Nigeria's Anchors Borrowers Program was launched in Kebbi State. Plus, a look at the intraday analysis at the FMDQ OTC market. We will begin with the story about the International Monetary Fund's estimates that the Middle East oil-dependent economies have missed out on the $390 billion in oil revenues last year alone, and face up to $150 billion in income losses this year as a result of cheap oil prices. Now, the drop in revenues stemming from the export of oil is the direct result of the plunge in crude prices from around $115 a barrel in the middle of 2014 to below $30 at the start of the year, and now above $40 per barrel. Now, the loss in potential revenues has put an enormous strain on the economies of major oil exporters such as Saudi Arabia and Kuwait, who have posted massive budget deficits in the past year. The IMF had previously calculated that the decline in energy prices would erase around $360 billion in oil receipts. To overcome these gaping budget deficits, Persian Gulf countries have introduced a raft of measures ranging from cutting energy subsidies to raising taxes. Some, such as Saudi Arabia, have also burned through the foreign reserves or started to borrow internationally to ease the fiscal pressures. And the yen was stronger against its rival currencies on Monday, with Japanese corporate players moving to pick up the Japanese currency after its rapid depreciation since Friday. Now, after touching its three-week high of 111 yen 90 early in the session, on hopes that the Bank of Japan might launch extra stimulus measures, the dollar's upside was way down due to selling by Japanese corporate players such as exporters ahead of the book closing at the end of the month. The Bank of Japan's policy setters are scheduled to meet April 27 to 28. The Japanese currency weakened substantially on Friday due to expectations that the BOJ would ease further later this week. The yen selling gained traction, especially because some speculative investors were quickly unwinding the yen buying positions after building up bullish bets on the Japanese currency to a recent record high level. Investors had continued to force up the yen until recently due to a lack of faith in the central bank's negative rates policy and the belief that the U.S. Federal Reserve will stand pat for some time. And most Asian markets lost ground on Monday, with many traders likely taken to the sidelines ahead of the several central bank decisions this week. The Japanese benchmark Nikkei 225 ended its positive run last week that added 4.3% to the index to close down 133.19 points at 17,439.30. Across the Korean Straits, the Kospi ended lower by 0.94 points at 2014.55. In Hong Kong, the Hang Seng Index is off 0.56% in the early afternoon of the day's trading session. Now, Chinese mainland markets also ended lower, with the Shanghai Composite shedding 0.41% to 2,946.96, and the Shenzhen Composite was off 0.41% to 1,859.90. Markets in Australia and New Zealand are closed for the Anzac Day public holiday for the day. And the stock market in Europe is set in continuous trade. Let's get some perspectives from Ulrich Bath, DWTV Channels TV correspondent, who is live to us from the Frankfurt Stock Exchange. Hello, Ulrich. Welcome to the program. Investors in Europe are once again looking over to China. The auto show in Beijing has started, and because China is the world's biggest automobile market, that's something the people in the financial markets are also following. What kind of news are you hearing, Ulrich?
Yeah, good news, at least from the perspective of the manufacturers here in Europe, the German ones, for example, because the Chinese Passenger Car Manufacturers Association is forecasting higher growth for that very important market. You said it was the largest in the world for 2016. It has a volume of about 24 million vehicles per year. And that will grow by about 10%, says that Manufacturers Association overall. And good news even more from the perspective of German manufacturers is that these people expect the luxury car market to grow even faster by 15%. And of course, BMW, Audi, Mercedes, Porsche, Volkswagen with some of its products fall into that luxury car market. And it could augur well for their business there. There's been a lot of fear here in Europe, also with the car makers, the investors who have shares, that the Chinese market would slow down. These kind of news seem to indicate that that's not the case. Still, having said that, the whole market here in Germany is down a little, and Volkswagen, for example, is also down quite clearly today.
Okay, Germany's business sentiment is also in the news, with the IFO index going down for the month of April. What does that mean for the economy and for the markets?
It means that the German economy is still growing at a moderate pace, but the sentiment in the business world is not euphoric. And already some people are commenting that the German economy is headed for trouble. For example, the president of the German Industry Association, Ulrich Grillo, who spoke at the Hanover Industrial Fair, he said that Germany is heading for a real downturn once the positive effects of a low oil price and of low interest rates go away. Then the situation could collapse. So there's plenty of pessimism in the market as well. But the IFO going down, the IFO, if you will, if you pronounce it in English, it's a bit of a mixed message, because the 7,000 corporations polled are overall, yes, a little bit less optimistic than they were the month before. But the current situation especially is being seen as worse. The future prospects are not. So it's a mixed message. Doesn't mean that the German economy is slowing, but there are some warning signs there, that's for sure.
And finally, Ulrich, people are also looking forward to the policy meetings of two important central banks later this week, the US Fed and the Bank of Japan. What are traders expecting to hear?
Yeah, you just mentioned the Bank of Japan in your news, and traders are echoing similar expectancies. I think that a lot of people think that in order to especially drive up consumer interest, that the Bank of Japan will further go on the negative interest rate side in order to try to stimulate credit and consumption. That will be something for the market to observe, because of the fact, of course, it will have on the price, on the exchange rate of the yen. For the Fed, which meets Tuesday and Wednesday, and where the results will be published on Wednesday in the evening, European time, African time. The expectancies, will there be a rate rise or not? Another one, totally mixed. The reports you hear, the protocols you read about the discussions within the Fed, some speak for it, some speak against it, and also the observers say the time is ripe when you look at the U.S. economy, but not when you look at the condition of the world markets, or, for example, the situation in most of the emerging market economies.
Ulrich Bath, thank you so much for your insight. Ulrich Bath is DWTV Channels TV correspondent, live to us from the Frankfurt Stock Exchange. We'll go on a break, and when we come back, we'll bring you more on the program. Please stay with us.